Okay, this is a daily chart of the S&P 500 index using ticker symbol SPY. And this is one of the best charts that you can look at as an overall basis for the entire market, the S&P 500. And so, as you can see here, that on the blip we had here with the the red candle down, green candle up, and now we're above the Tenkan line again. So clearly the market is still bullish according to the charting. You can have ideas in your mind. Maybe this is the top, maybe this is the top, and you can get these blips. And we traded that on a short on SCCO for a small profit, and we traded that on FCX puts for a small profit. But what you have to remember is that when the overall trend is positive, you can't necessarily look for massive gains on shorts unless it's an absolute complete buying frenzy, and that only happens maybe a few times a year. I specifically remember a few years ago, before the market crash or anything, Phelps Dodge, when it still existed and was now bought out by Freeport McMoran, it was holded at the start. And this was maybe 2006, I can't exactly remember. It was holded, the stock was being held at the beginning of trading for about 10 minutes because so many people wanted to buy, and because it's on the floor, they're trying to deal with the prices, and then it was up maybe $10 or more. And I thought to myself, man, that has to be it. And it actually was, when you see these huge massive buying frenzies. And it was a little bit like that with Intel. I think it was last week. But we have to look at this, and often trends can go further than people ever think are possible, and that's to the upside and the downside. So that's what we're looking here at the S&P 500 right now. If we look at the 240-minute chart, which I also like to look at, you can see that it almost tested the cloud right here. 240 is a great time frame for the S&P 500, and now we're above the Tenkan again. So things are still strong here. And this is the FCX trade for the put options that we got out of yesterday on Thursday. And we got in kind of around here. And so the reason I wanted to get out, so soon was because looking at the chart, probably would have been better a couple days before. And so sometimes when you can't get the absolute complete beginning of the trend here, and you're here down here, you have to be a little bit more careful. And this is the SCCO chart. It's very similar because they're both copper stocks, and basically the same type of trend here. And this is now USO that I have on here, the United States Oil Fund. This is the daily chart, and it's holding above the Tenkan and the Kijun line too. It made a nice blip here above both lines again. So things actually look fine for oil right now. It was actually kind of surprising yesterday on Thursday. I'm going to bring up APA now, Apache Oil, on the daily chart. It's holding the cloud, and this has been a bit of a disappointment here, but oil still looks okay. Yesterday was a bit of a funny day. Some of the oil stocks were up, some of the oil stocks were down, and it didn't really follow the underlying commodity. But I think that we can still hang on to APA here. And about a 5 to 6% pullback is kind of normal in this area. I mean, looking back here and looking back here and here and here. So it doesn't mean it's all over just because of these two little candles here on APA. This is gold under GLD, the daily chart, above Tenkan, above Kijun. Back here, this is where we got out of the original gold trade, and we didn't actually get back in, unfortunately. But gold still looks okay here, and this is something that I'm looking to add to in the future, actually, quite soon. Even though the US dollar has been strengthening against all major currencies, it's kind of at a point now where it's really going to have to break through and continue to rally. And actually what's been happening is gold has been rallying with the US dollar. And that can also happen too, because gold is a money, it is a store of value in and of itself. It's not necessarily always inversely proportional to the US dollar. And this is the euro. Reached its lowest level all year back here at 1.31. As you can see, obviously, the last couple candles heading up. Momentum down here, you can see, is going up. And an interesting way to trade this. This is a counter trend rally. Trend is always determined by the daily cloud. You can see here in the orange, and look here when it touched it last time, boom, fell back here. Down around this area was when Mark Faber, the guy of the Gloom, Boom, and Doom report, he's a Swiss analyst, he's been doing this for a really long time, decades, was saying the euro was oversold, but look, touches the cloud and boom, falls back down again. What you can do is, this is the 60-minute chart. I want to go here. And this is a counter trend rally. So it breaks the 60-minute cloud. On something like this, you can try to use the bottom of the daily cloud as a target. So it breaks the cloud right here at about 1.3285. Let me go back to the daily chart. This would be a maximum objective for me, about 1.354. So that's what you can do. If there's no cloud above, just go to a bigger time frame and you'll see the cloud. So this is the objective, and you use the 60-minute chart to get in. And that's the update for today. Thank you.